Hi everyone. If you are watching this, you are probably either a homeowner, a hopeful buyer, or someone simply trying to make sense of the dizzying state of our local real estate market. And let me tell you, what's happening right now in Vancouver housing isn't just unusual. It's a paradox that should make us all deeply concerned. Right now, as we speak, thousands of brand new condominiums are sitting completely empty across Metro Vancouver, unable to find buyers, while at the very same time, our city is grappling with a severe housing crisis, skyrocketing homelessness, and an exodus of working families who simply can't afford to live here anymore. We have a desperate need for homes, yet new buildings stand vacant. This isn't just a market correction, it's a fundamental breakdown that could reshape our city for decades to come, and understanding it now is absolutely crucial if you plan to buy, sell, or even just live in Vancouver over the next few years. So, buckle up, because we're going to dive deep into exactly what's happening in Vancouver real estate today and what the landscape will look like well into 2026. Let's start by looking at the immediate situation. The Metro Vancouver housing market is undeniably soft, and it's expected to stay that way or even get softer well into next year. According to a Royal LePage forecast, we can expect average home prices across Greater Vancouver to dip by another 3.5% by the end of 2026. For detached homes, the decline could be even steeper, around 5%, while condos are projected to fall by about 3%. This means that by late next year, the typical home in Greater Vancouver might sit around $1.15 million, down roughly 3% from current levels. The data from the Real Estate Board of Greater Vancouver paints a stark picture of a quiet market. Sales remain well below the region's 10-year average, and listings are lingering. Many buyers are simply waiting on the sidelines, hoping for better conditions, lower prices, or a clearer economic outlook. We just had one of the worst Novembers on record for sales. In fact, if we look at the last 10 years, November 2025 was the fourth slowest in terms of transactions. Compare that to November 2024, which had a lot of optimism and a higher trajectory of sales right before new tariffs hit in early 2025 and changed everything. But the real alarm bell isn't just the slow sales, it's the inventory. November 2025 saw record high inventory levels with over 15,000 units listed on the market. 15,149 to be exact. This is the highest we've seen in over a decade, and possibly ever. The sales simply aren't there to absorb this flood of listings. This disparity becomes even more pronounced when we look at the months of inventory, a metric that tells us how long it would take to sell every currently listed home at the current sales rate. In November 2025, we were over 8 months of inventory, a figure that hasn't been approached in the last 10 years, with the closest being just over 6 months in 2023. This imbalance, where inventory is high and sales are low, puts immense downward pressure on prices, and we've seen this play out with 10 consecutive months of price declines across Metro Vancouver. The condo segment, in particular, has carried the heaviest weight, seeing the steepest annual drop at nearly 6% year over year. So, why is this happening? Why are thousands of brand new homes sitting empty in one of Canada's most in-demand cities? The situation is a convergence of multiple powerful factors that no one truly predicted. Firstly, we've witnessed an investor collapse in the condominium market. Between 2020 and 2023, investors accounted for a staggering 50% of all condo buyers in Metro Vancouver. By early 2025, that number had plummeted to a mere 7%. The math for investors simply stopped working. Rising interest rates meant carrying negative cash flow every month, with mortgage payments exceeding potential rental income. And when property values are declining instead of appreciating, T here is no financial incentive to buy. This huge chunk of demand essentially evaporated overnight. Secondly, foreign buyer restrictions have played a significant role. British Columbia introduced a 15% foreign buyers tax in 2016, which later increased to 20%. Then, in January 2023, the federal government implemented a ban on foreign nationals purchasing residential property in Canada, which has since been extended through January 2027. Despite developer lobbying in December 2024 to lift this ban, the provincial premier has been absolutely clear. If foreign capital is just going to build housing that sits empty, that model is dead. And for good reason. Data from 2017 showed that while non-residents owned 7.9% of all condos in Vancouver, that figure jumped to 19.1% for newly constructed condos built between 2016 and 2017. Nearly 1 in 5 brand new units were bought by people who didn't even live in Canada. This leads us to a third, often uncomfortable factor: money laundering. The Cullen Commission, a public inquiry into money laundering in BC, determined that approximately $5.3 billion was laundered through BC real estate in 2018 alone. The examples are shocking. An individual declaring $40,000 in annual income purchased $32 million worth of Vancouver real estate and moved $114 million through bank accounts. A police intelligence study found that over 10% of luxury property purchases, homes valued between $3 million and $35 million, involved buyers with criminal records, 95% of which were linked to Chinese organized crime networks. Researchers estimated over $1 billion in Vancouver properties were connected to criminal activity. As a former BC Attorney General put it, we could add housing supply without ever hammering a nail, simply by removing the dirty money sitting in these vacant homes. The combined effect of investor retreat, foreign buyer restrictions, and crackdowns on illicit funds has removed huge segments of demand that developers had come to expect and build for. And finally, perhaps the most critical factor for local residents, affordability. The CEO of the Urban Development Institute, Anne McMullen, stated that building a unit today is out of the price range of 80% of the public. Let's look at the numbers for November 2025. The average Vancouver home sold for $1,235,575. To qualify for a mortgage at that price, you'd need an annual household income of roughly $226,680. But the median household income in Vancouver is just $89,771. That's a massive disconnect. RBC Economics calculated that a staggering 96.7% of the median household income is required just for home ownership costs in Vancouver, making it the 4th least affordable major housing market globally, behind only Hong Kong, Sydney, and San Jose. Even for condos, where the benchmark price dropped to $714,300 in November 2025, down 5.2% from the previous year, most working families still can't qualify for financing. Developers are desperate to move inventory, offering incentives like free parking stalls, storage lockers, and cash back on completion. But these incentives are for units many buyers don't even want. A significant problem is that 66% of the unsold units are concrete high, rise condos, often small, 450 to 500 square feet, and many lack parking spaces. This simply doesn't match what families need, which are often larger units from 800 to 1,500 square feet. This highlights a crucial point. You can have a housing shortage and thousands of unsold condos simultaneously if what's being built doesn't align with what people need or can afford. So here we are in late 2025 with a market that feels fundamentally broken from multiple angles. Developers are facing a severe cash crisis, leading to layoffs at major firms like West Group, 12% of workforce, and Renee Group, 5%. Projects are being delayed or cancelled because developers can't secure financing or meet required pre-sale thresholds. Lending standards have tightened dramatically, pre-sale requirements are stricter, and construction costs have soared by roughly 20% since 2020, making many projects financially unfeasible. This is why we're seeing developers walk away from land, delay excavation, or cancel projects entirely. Even court-ordered sales are climbing significantly, indicating stressed developers and over-leveraged investors are tapped out. This current market weakness, with its declining prices and high inventory, is exactly what Royal LePage is forecasting to continue into 2026, with overall prices dipping further. Buyers, you currently have more negotiating power than we've seen in years, and incentives are on the table. But here's the critical twist, and it's the part almost no one is talking about. This very slowdown is simultaneously creating the conditions for the next major housing shortage, one that will profoundly impact Vancouver's market in 2026 and beyond. This isn't the beginning of a crash. It's the midpoint of a reset before the next cycle. And the most important factor driving that next cycle isn't demand, it's supply destruction. When we zoom out and look at all residential construction across Vancouver, the picture becomes incredibly sharp and alarming. In October 2025, data showed a 4.9% decline in condos under construction and a 4.5% decline in single-family homes under construction. The only segment showing growth is purpose-built rentals, up 2.7%. But even here, many developers are hitting financial walls, leading to delays and cancellations. Nationally, over 20 purpose-built rental projects have been paused or cancelled in the last 6 months, with Vancouver experiencing permitting delays and stalled shovels. The single-family housing market faces an existential threat. Historically, single-family construction made up 20% of what was being built. Today, it's a shocking 5%, the lowest share in modern Canadian history. This signals a structural shift that will make detached inventory even scarcer for the next decade. When supply isn't being replenished, even small waves of demand can trigger disproportionate price reactions. But the real story of future supply, and the most alarming statistic of all, lies at the permitting level. Building permits in Vancouver are down more than 40% year over year, marking the lowest permitting activity we've seen in 45 years. Think about that for a moment. 45 years. You cannot have a healthy long-term housing market when the pipeline is this thin. Permits tell us what the market will look like 2 to 5 years down the road. Right now, the next wave of inventory simply doesn't exist. With Vancouver relying heavily on multifamily construction, when condo starts drop by almost 5% in a single month, coupled with population growth slowing but not stopping, we are creating the perfect conditions for the next pricing spike. Total units under construction have fallen, and completions, which typically lag new starts by 24 to 36 months, are trending flat. With a sharp slowdown in new starts from 2022 to 2024, we are now entering a period where completions will fall off a cliff. Developer insolvencies, like those seen with Curve and multiple Westbank properties facing financial uncertainty, are early symptoms of a much broader issue. Lenders have tightened their underwriting standards, demanding higher equity and stricter pre-sale thresholds. With construction costs rising significantly, many project pro formas simply no longer pencil out. Developers are literally walking away from land, delaying excavation, or canceling projects. While it seems counterintuitive amidst current inventory, this supply destruction is why the Canadian housing system, and Vancouver specifically, is already in the early phases of a future shortage. Not because millions of people are arriving tomorrow. In fact, the population story is shifting dramatically. The federal government is dialing back immigration targets, and 2026 is projected to be the first year in decades where population growth actually slows. British Columbia even lost population for the first time since 1951 in the second quarter of 2025, and international student numbers have dropped significantly. Metro Vancouver has revised its annual growth forecast downward by 15%. But here is the paradox that policymakers are missing. Lower immigration and slowing population growth will not fix our housing crisis. Why? Because the crisis isn't about too many people. It's about too little supply entering the system. The housing pipeline is shrinking even faster than demand is adjusting. We have a massive existing housing shortage, a rental vacancy rate below 2%, homelessness up 32% in 3 years, and thousands on waiting lists, yet we continue to build the wrong product at the wrong price point for the wrong buyers. When construction slows, permits collapse, developers fail, and financing dries up, the market is actively shaping its next shortage right in front of us. You cannot cut construction by nearly 5% for condos and single-family homes. Reduce the share of single-family construction to a mere 5%, push permits to 45-year lows, and expect prices to remain soft long-term. These are the exact ingredients that led to the price accelerations of 2015 to 2017, the 2020 to 2020-21 surge, and the post-pandemic rebound. Every major price spike in Vancouver begins the same way, with a supply drought forming a year or two before demand truly shows up. So, what does all of this mean for you? Whether you are a buyer or a seller looking towards 2026 and beyond. For buyers, the message is nuanced but critical. Yes, inventory is higher today. Yes, prices are softer, and you have more negotiating power. Developers are offering incentives like free parking, storage, and cashback that were unheard of during the hot market. This is a unique window of opportunity. But you need to ensure any purchase makes sound financial sense at current prices, not based on assumptions about future appreciation. The window of softness will not stay open forever. When construction slows this dramatically and new housing supply stops flowing into the system, buyers in 2 or 3 years will likely face the exact opposite problem: low inventory, bidding wars, and intense upward price pressure. Smart buyers understand that today's softness is temporary because the underlying supply data is telling a very different long-term story. For sellers, the message is equally clear. If you're selling into this environment, your pricing strategy has never been more important. Overpricing is deadly in high inventory markets, and properties that aren't priced correctly will linger. However, when the market inevitably enters its next supply crunch and all the data indicates it's already forming sellers who hold high-quality, well-located homes will find themselves in a significantly stronger position. Understanding the supply pipeline rather than just the weekly sales numbers will be key to winning in the next cycle. The 3,493 empty condos projected for the end of 2025 represent more than just unsold inventory. They symbolize a market in transition where the old model of building luxury units for investors and foreign buyers no longer works. The city's empty homes tax successfully reduced deliberately vacant properties by 67% over 7 years, which was a policy success. But you can't tax developers into selling units that nobody can afford to buy. This fundamental disconnect is why so many British Columbia residents are leaving the province, with 70,000 people moving from BC to Alberta in 2024 alone, marking the largest interprovincial migration loss in 74 years. Housing affordability is the primary factor driving this exodus. When teachers, nurses, tradespeople, and middle-class families can no longer afford to live in a city, they leave. And those empty chairs at restaurants, empty desks at schools, and empty units in new buildings all tell the same story: a housing market designed for global capital rather than for local residents. In summary, Vancouver's housing market is caught in a profound paradox. Today, in 2025, we are experiencing a significant slowdown marked by record high inventory, declining prices across all segments, and thousands of newly built condos sitting empty. This is largely due to the collapse of investor and foreign buyer demand, coupled with severe affordability issues for local families and a failure to build homes that meet their needs and budgets. However, this very slowdown is setting the stage for a critical housing shortage in 2026 and beyond. A dramatic decline in new construction, record low permitting activity, and widespread developer distress are systematically destroying future supply at an alarming rate. Even with slowing population growth, the shrinking housing pipeline means that the current market softness is temporary. We are not experiencing a crash, but a fundamental reset that will likely lead to renewed price pressure and even greater scarcity in the coming years. Navigating this complex, paradoxical market requires deep insight and strategic planning. Whether you are looking to capitalize on current buyer opportunities, strategically price your property for sale, or simply understand how these monumental shifts will impact your future in Vancouver, having expert guidance is more crucial than ever. Don't leave your biggest investment to chance. Text or call me today to discuss your specific needs and how to best prepare for what's coming in the Vancouver housing market. My contact information in the description below, or scan the QR code on screen. Thanks for watching.